today we'll be talking about candlesticks, candle patterns, candle charts, and how to identify a momentum gain candle and what candlestick is all about, price action, in other words. So we're going back to the charts. These are Bitcoin charts, and today let's look about candlesticks. So when you hear about candlesticks, what do you mean? What do you think they're talking about? Candlesticks are what makes up the charts. If you look any chart, be it forex chart or crypto charts, anything that made up or trading, you can get a candlestick from there. And candlesticks are made up of two colors, two candle, the buying candle or the red candle, which is called the bullish candle or the bearish candle. There are two type of candlesticks. The bullish candle signify the green one, and the bearish candle signify the red one. So there are also candle we are going to look about, like the indexation candles, or the doji candle, which has no body, or the other one has a little body. So we are going to just dive right into it, and I'm going to pinpoint those candles to you. First thing first, with no further ado, let us go straight to the point. So let's talk about the green candle. If the green candle is about to open, it opens from the down to the up. Like if the candle is about to form, it doesn't form from the top. No, the green candle forms from the down. This is the opening of this candle. When you check the opening, this is February. You can see here, when this candle opened, it was around, if you look at the right side, it was around 50. This candle opens, let's check, you see the time. When it opens around 16 of March, okay, let's check the date. It opens around Monday, 26 February 2024, and it was around 50,663. So when this candle closes, it closes around 54,744. So we are on a daily time frame, and I'm trying to explain it for you. So the bullish candle always open from the down. They don't open from above, they open below. They open from here and they close above it. So when you put the candlestick, it tells you the date of the candle, and each candle stands for daily candle. You can see this is a daily candle because we are on a daily time frame. If you put it on a 4 hours time frame, each candle automatically means each candle forms for 4 hours. 4 hours, this was 12 o'clock and this was 16 o'clock, so it was 12, 1, 2, 3, 4. So this was 4 o'clock. Likewise, this was around 8 o'clock. So each candle represents 4 hours. When you put it on a 1 hour time frame, each candle represents one hour, be it red or green. You can see this was around 2 o'clock, then this was around 3 o'clock, this was around 4, this was around 5, this was around 6, and this was around 7 o'clock. Very easy. So when you take it back to weekly time frame, this candle all represents, each of them represents a weekly candle. Let us go, let me show you something. So like I said, the green candle represents a bullish, so many buyers, the buyers are in control, and the red candle represents the sellers in the market. So let us go straight to, let me explain something to you more better so you can understand. Likewise, if we go further for a month, if we go further to a monthly candle, if you click 1 month, you see each candle represents a month. Let's go. Okay, each candle now represents a month. This is Bitcoin USDT. So when you click on it, this was February, and the next one was March. We are on April, now May, you can see June, July, and here is it, August. So we are currently on this candle, and if you should work on any of these candles, like take for instance, let's work on this candle in a monthly candle so you can see what I'm trying to say. I don't want to add this to it, so let's take this off. We are working on this candle. So when you open this candle and a monthly candle, you can see, now put it for a week. So this candle actually recently opened, and we are in a new we are ended the week. So this candle actually opened. Let's see the date it opened. This candle opened Monday 29 July 2024. So the 29th of July is not up to a week. So this candle still got a lot of days to go, 7 days before it completes a week. So when you go further, we are going to just work on one candles. Now let's go for days. You see how many days we've been so far. 29th. Okay, this was 31st. Okay. So this was where we are supposed to be working on, 29th. So let's drag it there. Yes, 29th. So these have been one candle for 1 month. This candle started 29. It started as a red candle, so it opened above. You can see. So you can see this market has been on a downtrend since on the 29th of July. The market has been on a downtrend. Like I said, the green candle opened from below to above. The red candle opened from above to below. Don't miss it. So this market has been on a downtrend since Monday 29th. So if you have entered for a sales around this zone, you would have been on a good sell up to now. So you can see each candle represents day because we're on a daily time frame. Now this is Monday, this is Tuesday, this is Wednesday, this is Thursday, this is Friday, and this is Saturday, being Saturday 3rd of August 2024. So if you go further, put it on a 24 hours time frame, you can see that we are only working on 1 month candle. This is just a monthly candle. Okay, this is just a monthly candle, and you can see so far so good what the market has been doing in just one candle. So when you put it on a 1 hour time frame, you can see for the past this recent month we are in, daily time frame up to the 1 hour time frame, this market has been on a downtrend because it won't be able to take off this high since it got to 69,000. So this market has been up to this zone and refused to go up. So that is just it. So this is it for candlesticks. And now let's go over to the doji candle. So when you see a candle open and then closes like this, we call this a doji candle. I have to take this off now. Yeah. Okay, so we call this a doji candle. Let me spot one for you. This is a doji candle. For instance, or we call it indecision candle. Yeah, this is the name, indecision candle. What it means, I'm going to look for one, and I'm going to explain it what it meant. So when you see a candle like that, you'll be able to portray what it means. Okay, this is one of the candle I'm talking about. You can look at this candle over here. It's not big, it's just at the middle. What simply means that buyers, this candle opened from the down and also pushed to the upside, then sellers push it to the downside, then it end up with nobody. So it is called a doji candle because it has a tiny wick, no buyers. It means buyers and sellers are present in this market. If you go further to analyze that single candle, you will see what we mean. So this other candle is called I forgot the name of this candle. They all have a name, but you just need to be aware of them. So what this means is sellers took control over this candle. In other words, this candle was open as a buying candle, but sellers push it to the downside. You can see sellers push this to the downside. So this candle actually closed as a selling candle, though it opens as a buying candle, but sellers push it. So in other words, you can say the sellers took control over the market during this period of time when this candle is open. Likewise, this other candle, you have the doji candle. Sellers and buyers were present in this market, but this current candle, only the buyers were present, but sellers took control over the market. Is the reason why you have something like this. And most times when you see candle like this, it eventually tells you the market is likely to go down. And if you see, even after this candle, the market tried to buy for some time and then the market dropped drastically. So most time when you see candle like that, It tells you the market, what the market is about to do next. But most time when you see a candle like where the sellers is also present, let's go and let me show you something. You can also check where the sellers were also present. Let's see. Okay, this was where buyers also took control over the market. Let me look for candle like that. Okay, this was where the buyers pushed the market upwards. To look at this candle, this is also called doji candle, but the buyers took control over this market. And then what do you see? The market move up from there. You can see the market move up from here and then went up from to the upside. So whenever you see these candles, take care, take note of them, because they says a lot about the market. So when you're trading and you see some candle, you know what they meant. So now let's go over to fair valid gap. Fair valid gap are 3 consecutive candles or 2 consecutive candles. In other words, sellers took control over this market in the period of time. This is 1 hour, and this candle sold for 1 hour, continued selling for 1 hour, sold for 1 hour, but buyers try to push it upward. That is when you can see that little wick. Now sellers continue selling the market to this point, and then the market move. So when you see a candle like this, you see this 3 big candle like this is what we call sellers are in control of the market, and this is where we have our fair value gap. And most time price are always likely to come back to this zone because only sellers were present here. So price are likely to come back to this zone because these are where orders were gathered. So people like us retail trader eye this kind of a zone because we expect the market to come move. If Bitcoin is likely to come up, like to buy, if you get to this zone, it's going to respect this zone because automatically buyers are already present here and sellers are already present here. So if the Bitcoin is likely to come up to this zone, if it come up to this zone, it's going to set down because so many people are eyeing this zone. And there's one thing to understand about market structure. And market always balance itself. In other words, when market goes up, comes down, and take a big move up, and then start to go up from there, let me tell you what happens next. Market always come back to balance this zone. Yes, market always come back to balance this zone and continue going up. You see, so market always do come back to balance the zone. So it's what we always do expect. I will show you an example in the chart list. Let me show you an example on this chart. If you look at this market, when this market actually broke structure to the downside, then accumulated for a little while, broke structure again, guess what happened? This market left this fair value gap. So this is called fair value gap because this is a single candle without no green candle, and it was very long. So this market actually left this place open, which has been filled. How has it been filled? You can see it has been filled. This week closing inside it show that it has been filled, but there are still sellers present in this. So anytime these markets are likely to come back to this zone, if you pay close attention, you keep checking the chart, we see this market will come back to come test this place and then continue going back to the downside. So like I said, if I'm taking a trade, I will take a trade from this zone. I will take a trade from this zone and I will put my stop loss. I will take a trade from this zone because here is my order block. Oh, and let's talk about order block. Order blocks are where orders are gathered. First, how do you identify another block? When you see a green candle before a red candle, then you know it's a bearish order block. The candle must be green before you see a red candle or a red fair value gap candle. How can you identify the good order block is when there is a fair value gap, and after the green candle, there you have your fair value gap. This market is 100% going to respect this, but we are not the market. Most of the market intend to ignore it. That doesn't mean you are not a good trader. The market just have to do its thing. We don't control the markets. We only react to what the market is doing. But this is a good zone to enter for a sell if you have to take this because of this order block. So this is another block. We're going to talk more of other block, but this is a bearish order block, like a sell order block. Let's go and check a bullish order block. So and let me show you how the market react to a bullish order block. So this is a bullish order block right here. I'm looking for a decent one that the market created and respect. But you can see this is another block, but the market did not respect it. You see, the market didn't respect this one. The market was supposed to hit this place and then react a little bit before going on, but the market did not respect it because look what broke the market. These are momentum candles. We call them momentum candles because these were momentum gain candles. They like a lot of buyers were present in this market. So the sellers here were not enough to suit these buyers. So the buyers actually bought it, and then you need to understand this is a market based of selling, buying and selling, buying and selling. So if 50 people are buying here and 20 people are selling, if you get to that zone, the buyers will always win. But if 20 people are selling here and 100 buyers are in this market, is the reason why these candles are big, because a lot of buyers were present in this market at this point of time. So the reason why most times it's always good for you to know where the market is going before you enter for a buy or for a sell. Yeah. So when the buyers are too much in the market, they intend not to respect this zone, because this was a good zone for the market to respect. If you see, this is a very good zone. The market was supposed to respect this zone, but because the buyers present were too much, so the market intend to just break through it, and then the market move down, and then it broke again from this place. So you can see it's a very good zone. The zone were though respected. If you see when the market came back to break it, it was very hard, because now it now changed to we are going to talk about support and resistance also. So when a zone is hard to break, it's become a support or become a resistance. Then we're going to talk about that also. But now let's talk about the candlesticks. Candlesticks are good because they help us to know what the market is saying. And we have the momentum candle, the fair value gap candle, other blocks, and also we have the buyers and sellers, which are the green candles and the red candles. The green candles, before opening, they open from the down to the upside. This was a green candle. This was a green candle, yeah. The green candle opened from below and then go up, but sellers took control. The reason why it's red. The green candle again opened from here and then pushed up. The red candle took over, opened from above, pushed down, opened from above, pushed down. The green candle opened again, and then that is it. So these are for candlesticks. If there's any question, you can let me know. So these are just for candlesticks. So I'm expecting this market to actually come back to this zone to test here, or probably test this zone. So if the market just keep moving this way, because there's no momentum, you can see the candles are just little buyers, little sellers, little buyers, little sellers. So this market should come back to this zone, because these are fair value gap. Take note of this big candle. Fair value gap consists from where this arrow stop to this place. So this zone is a good zone for a sell. You can enter from a sell from here, but I tend to enter from here. So, but this is a good zone because of the fair value gap. So market do not move and don't come back, because this zone is noted to be a selling zone because of these big candles. So market is consists of buying and selling. So when one candle move directly, impulsively, the market is likely to come back and test that zone and then continue to the downside. So that is how you enter for a sell or you enter for a buy. Most of my confirmations are fair value gap or other blocks, which I'm going to get right to it soon. But now you have to take note of all this. When you see the market choppy like this, you have to know what the market is doing. First, know the direction of the market and know what each candlesticks are saying. When you see a doji candle, you have to know buyer and sellers are present on the market. You can see, for instance, I was trying to look for fair value gap. Okay, this was an impulse move. You can see, look at this for instance, this was an impulse move. Yeah, just green candle only. So buyers were in control of this market to get to this place. So along the line, after the market has finished buying and then consolidating, look what happened. The market intend to come back and test that zone. Look what happened. The market intend to come back, and afterward, what happened? You see, the market tests this zone, and what did happen? It bought from there. The market came back test this zone. So if you have to take this trade, for instance, this was how you would have took the trade. Let me close this and let me tell you. If you have to take this trade like this, you would have come and first set your order block to go like this. I will put my order block from here. My order block will be from here, yes, and I will just bring out my long too. I'll go for a long for here. Yeah, I'll be going for a long if I have to take this trade, and this will be my stop loss. And you see, when this market eventually came back, what did you see? The market came back to test the zone. I told you, each time there is an impulse move, the market intends to come back. And what did you see? The market actually came back and tried to play along. And what did you see? The market actually went up, and up till now, till the market actually comes down. So this is just how you take your trade. You just know the direction of the market, especially when there's an impulse move. You know the market is coming to continue its journey. You see, the impulse move shows an uptrend, and after everything, the market came down, continue with an uptrend. So it's either you sold from here, or you would have entered from here to buy from here. So that is just it.